Happy Tuesday, everybody. I hope you had a great long weekend. Today is February 21, 2023, and this is your Monday market update on Tuesday. So last week was another big week in the markets. There was a lot of news, and as we've been saying, a lot of noise, a few signals that might be changing again. Let's jump right in, recap the action from last week, and talk about what to expect this week. The feel on Monday as trading got started after a long Super Bowl weekend, but a quiet weekend for market news, was some improvement in the outlook for growth and hopes for a soft landing, or the new phrase, no landing. We'll talk about that in a bit. We only had one Fed head, Bowman, and he is walking the same line we've been hearing, higher for longer. But at this point in the market, it is the market's saying that it's priced in. There was some eco data, inflation expectations on the 1 year held steady, but the 5 year inched up a bit. But the key was the easing of the wage inflation data. Recall, that is one of the keys that the Fed's watching. Markets backed off the highs as the positioning for the CPI number on Tuesday came in late in the day, but the buyers came back and the markets closed near the highs. S&P and Dow both finished up a bit over 1.1%, NASDAQ up almost 1.5%. As markets got ready for the CPI on Tuesday mornings, futures were a bit higher. Then the CPI print came in higher than expected on both the core and the headline. Upward revisions to December numbers also. Terminal rate expectations were sent over 5%. CPI data is getting a little bit messy as a lot of the numbers are getting recalculated and different calculations are being used. Now they're looking at the super core, not just the core. So we can slice and dice this any way you want. Are you seeing prices fall yet where you're going? I will say I did see eggs back at $2.99 a dozen by me, so I don't know about that. Stocks gapped lower but quickly reversed on the priced in idea as we heard from the Fed heads, and even Biden chimed in that more work was to be done. Speaking of Biden, just a note, as I mentioned this a few weeks ago, Lael Brainerd is set to be named as the director of the National Economic Council and thus removing a dovish voice from the Fed. We'll see what comes of that. The stocks bottomed midday, and as Barkin said that, yes, higher for longer, but also they may not need to raise as high if inflation keeps falling. Harker added that though the Fed is not done, we are likely close. Williams also spoke, but nothing new there. The market closed in the top half of the day's trading range, pretty much flat. Dow down 0.5%, S&P pretty much flat, and the NASDAQ up 0.5%. Wednesday started with futures indicating more selling, and then retail sales were reported and came in way above expectation. An Empire Manufacturing survey was also better than feared. These numbers support the soft landing, but still leaves room for a more aggressive Fed action. Overall, remember, good news is bad news. The world is turning turtle, as I said last week. News flow quieted, the market moved higher until the Atlanta Fed number was raised, good is bad, and then overcoming a small bit of selling in the last hour, stocks did end close to the high of the day. The Dow was just up a bit, S&P up about 0.25%, and the NASDAQ up just under 1%. A few quick fun facts. Recall that we've spoken about retail sales numbers before. They are not adjusted for inflation, as we've said, so that when prices go up, even if the buying is constant, the retail sales are higher. As I mentioned before, and Jay Powell's been saying, we are seeing some deflationary pressures, but this is still something to watch year over year. I'm in the camp that I hope that Powell is right, but I'm not seeing that yet. Cost of food is up 11%, electricity is up almost 12%, airline tickets up 26%, butter up 40%, eggs up 60%, beef up 20%. You get the picture. Also, with the recent move up since the beginning of the year, a quick recap on what we'll call the bull trap, simply a rally that does not have lasting upside. We've seen a few lately, late March and then again in August. As you know, both were followed by selling. One of the major things we need to keep looking for to see if there's another bull trap is to get some more conviction in the market. More people evidence this by volume. Most people evidence this by volume. This has not come about yet, so keep an eye on that. I mentioned last week some fluff coming back into the market. Here's one to watch. Goldman has an index. They don't tell you what's in it, but it is called the Goldman Sachs Non-Profitable Tech Index, and it's up 30% this year. We do need to be aware of these things. Okay, back to the quick recap. Thursday was day 3 in a row that markets gapped lower. Eco data, Fed heads were the latest culprit. PPI ran hot, and that was the big one. Philly Fed missed estimates and had some troublesome rising price pressures evident. Jobless claims and housing starts all played a part. Mester, one of our regular Fed heads, shocked the market a bit when she talked about a 50 basis point move that the committee started talking about. Bullard hit that point again, and the markets did not see that one coming, and it was in the selling mood. Overall, this does set up for an interesting read from the Fed minutes coming out this week. More on that in a moment. Dow was down 1.25%, S&P was down a little bit more than 1.33%, and the NASDAQ was down just over 1.5%. Not disorderly, but not a positive tone either. Making for the 4th day in a row, markets gapped lower on Friday as German CPI was higher than expected, worrying everyone that the direction of slowing inflation can still change or blip back up. Also, UK retail sales, like us, good as bad, and they were more positive than expected. Fed head Bowman moved the markets when he talked about the other side of the story. In his view, the data is not showing that inflation is coming down. Again, Recall that Powell said the words disinflation 15 times in his last speech. So this is more of the back and forth. We did get Barkin to wrap up the week with the support of another 25 basis points in March. That, as you know by now, is not news. We did get some dip buying into the end of the week, but the markets finished mixed and nothing too exciting. For Friday, the Dow was up just under 0.5%, S&P down just a bit, less than 0.25%. The NASDAQ was down just over 0.5%. For the week, another down week for the S&P, but the Dow eked out a gain by a hair. S&P was down about 0.25%. NASDAQ also managed to stay green about 0.5%. There are a lot of blanks to fill in all that last week brought, but we'll have to wait until later this week or next week. Sorry. This week we had, of course, yesterday off, but off to the races again. We'll get manufacturing and service eco news today, as well as more from the homes side. Tomorrow we'll get those Fed minutes I mentioned. This will be more important now that we've heard about this 50 basis point discussion. Fed heads Williams will also get to the mic. Thursday we'll get Q4 GDP for the second time. We'll get some personal consumption numbers, and we'll get the increasingly important jobless claims. Fed heads will be out. Bostic and Daly will get their shot. Friday, as of now, is looking to be competing for the most important versus the minutes. Core PCE, the Fed's favorite number to watch, will be out. Personal income, personal spending, even the University of Michigan survey is back. Inflation expectations and sentiment. It is the busiest day to watch Fed heads. Remember what I said, it's easier to find a Fed head right now than a rerun of Law and Order. Jefferson, Mester, Bullard, Collins, and Waller, they're all taking turns. Rest assured they will have something to say about the minutes and the PCE. We're starting the week in the red. We'll see how we end the week, not to mention the day. I want to remind you, as much focus is on the Fed, in my opinion, most of this is baked in. What we need to focus on is the effect that this economic situation is having on earnings and in turn valuations. This is the key to watch as we get deeper into Q1. We've got a bunch of retail earnings this week. Remember what I said about retail sales being about higher revenue since prices are higher? I think that will not be such a focus. It'll be on the bottom line. What are margins looking like? And what does the forecast for Q1 and Q2 look like? There's a lot of stories to be told this week. Okay, that's a lot for this week and even for a holiday shortened week this week. Please come back. There's still a lot to tell. Stay in touch and have a great week.